Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil on an inventory breakout. We have a news breakout. It's Wednesday, and every Wednesday, unless there's a holiday on Monday that would push it off, we have inventory day. Now, inventory days can be really tricky to navigate, and you have to really know what you're looking for because they can get nasty. And as you can see from this last candle right here at the news when it came out, that's exactly what I'm talking about. It gets really rough if you're on the wrong end of the market. And in this case, this would have whipped out both sides because the buyers and the sellers got slapped out of this one. Now, in terms of from yesterday's movement had that big run higher, and that big run higher broke above that prior little swing right there, and it never came back. So that's going to be an area of interest if we start dropping into that level, and that's exactly what happened. We opened slight gap down, push down, and we find immediate support right off of that level. Now, because of inventory day, we want to be careful buying in here, but there is an opportunity to buy for a quick little scalp towards the upside. But when you get this candle right here, that tells you exactly what's going on. We tried bouncing off, the buyers tried defending that swing, and they slammed lower. Huge bear candle. All systems point to down. Now, a lot of times when you get this breakdown of a level like that, it'll pull back to it, retest it, see what the buyers and sellers want to do. Do they agree on that breaking down? And if they do, you'll see sellers come in. And if they don't, they'll slam back above it and do the same thing on the other end. In this case, we have a nice sell breakdown for a beautiful quick little scalp there. And then we start going into what we call dead time. We have news at 10:30. That's when inventories comes out. And we usually stop trading around 10 o'clock, 10:15 or so to prevent situations where you get stuck into the market when this big bad boy shows up, right? So when this candle shows up, and the reason why we even mentioned that in the first place is because this initially spiked it went down, up, down, and then it whipped everybody out. And that break on both ends is why you don't bracket these types of moves. News can be really profitable on a sim account, but when you're trading a live account, you have to deal with massive amounts of slippage when you get these types of candles. And in this case, a bracket trader would have had a sell, whipped out at break even. They would have had a buy, whipped out. So you have a bunch of losses into one that finally works that they probably skipped because they're scared now. So that's the kind of psychology that happens in these areas. Much better to wait, much safer to wait, and we get this huge bear candle closing on its lows, and they follow it up with another bear candle closing on its lows. Heavy bearishness. Notice the wicks on the bottom of all these candles, even the news candle, they're only 3-4 ticks. There's not much wick on the bottom, meaning they're selling all the way until the end of that candle, and they open back up into a small little bull candle. Now we have to ask ourselves, is this bull candle going to be strong enough to take back this drive lower? Probably not, right? Especially not when the sellers have continuation and confirmation that the move is going farther down. So that tells us, hey, you know what? We're probably going farther down and we need to be looking for selling opportunities to drop the market even further. So what you can do is either sell underneath that candle, knowing that if it breaks underneath that, you're going to get a lot of sellers in, and there will be some aggressive sellers that just hit the sell market button as soon as that candle closes. Either way, though, drops down and continues a little bit lower. Now that push down, we can start seeing that the sellers are probably taking some profit, and it's getting a little bit kind of choppy inside here. Looks like it may be forming somewhat of a spike in channel to the downside, but we get you a nice little bounce off here. Again, buying off the table. We're not even interested in buying right now. We're interested in selling. But if we see the buyers try and get trapped, now we're interested. The buyers turn in, they try to pop higher and get the market going up. They're immediately wrong into a beautiful bear candle. Buyers that got in on that are going to exit underneath that candle, and sellers will see that as an opportunity to sell, and that gives us a reason to drive the market down to finish the move off and get those objectives towards the downside. So just a absolutely beautiful news breakout move that we had on our hands with a little bit of action before the news. But this just goes to show you it's much safer on both your mental stability and your account to wait until that news comes out and then look to trade it afterwards so you can get a little bit of a feel for what's going on. So beautiful combination of technical analysis and market psychology. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.